everyone, welcome back to another live trading session. Just a quick sound check before we go on. See if everything is all right. Okay, sound seems to be good on my side. Let's go on with the general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so we got a quick jump start in the market earlier from President Putin's comment. Right, we'll take a look at the market in a minute, but I just want to focus a little bit more on the event tonight. So the whole thing with the FOMC tonight, what we're looking for is actually the economic projections. It's not really a matter of that 75 basis points hike that the market is expecting. There's even a probability of a full percentage hike tonight, but what we actually want to focus on tonight is actually the economic projections. So if you're looking up on all these datas from the Fed, which is on the Fed's website, if I put the link up here, I don't know if you guys can see it here, but the link is there, federalreserve.gov/monetary policy. That should take you into the list of meetings. This is going to get released the same time as the interest rate hike. Everyone has around about 30 minutes to kind of process what's going on here. But the key thing to watch out for, it's actually not the interest rate hike, but it's the future projections of the federal funds rate, which is how far the interest rate can go. Now we have projections that funds rate could go up to 4% to 4.25% in 2023, and then drop down to around 3.5% in 2024. What is likely going to happen today is everyone's going to be focused on the projections for, this is so close to 2022, I think everyone's going to be looking at 2023. And see if there's a lot more of the members that's actually going to put up the dot plan in terms of the fund rate, the projected funds rate in 2023. So this is going to be the focus. If it is, right now it's all pretty much lined up around 3.5 to 3.75%, right? We see a lot more dots closer to 4%. And then maybe a little bit more around 4.5% or maybe 5%, we don't know. If we see one dot around 5% projection, then that's going to be hawkish for tonight. That's going to benefit the US dollar. So this is going to be the main focus. I know this is a little bit weird for a lot of you guys out there, but tonight's event is actually not about the interest rate. We kind of figure out the interest rate hike, how big the hike is going to be and stuff like that. What we don't have is actually the economic projections. The last published economic projections was actually in June, so it's been 3 months. Basically, this is what a lot of traders are actually going to be waiting for. This is going to be the forward guidance that's going to be provided by the FOMC, pretty much for the next 3 months to 6 months. So we'll see how it goes here. Because post June we saw a little bit more of a hawkish stance coming out from the FOMC. That hasn't been projected into the June economic projection. So this is actually going to be key tonight in terms of their dot plan for future Fed funds rate. So we are kind of looking at the terminal rate in the near future. So this is going to be key. So yeah, if you guys are trading the FOMC tonight, this is going to be your focus. Read up on anything about the dot plan and stuff like that. If that comes up in the news. That's your main focus. If it comes closer to 4%, then we are looking at a little bit more of a hawkish FOMCs. So yeah, this is going to be the key thing tonight. Okay, so clear on that side. We can go on to the chart. So we 1, 2, 3, 4, 5, around 6 hours ago. Basically, we have a little bit of a dip on the Euro USD, the Pound USD, pretty much all the yen crosses. This is because of President Putin's comment in terms of them, basically declaring that they are going to be mobilizing troops. Excuse me. And the Luhansk, if I pronounce it right, Luhansk region. They basically want to join up with Russia. I think they're going to be holding up a poll this week. Whether that poll is legally valid and stuff like that, that's another different thing. But warning to the Western nations that Russia is serious, and they are willing to mobilize their troops, whatever weapons they have. That kind of scares the market a little bit. So we have a little bit of a risk-off market condition today, right? And that's kind of shift things up a little bit here because this is kind of unannounced. So we have that risk of selling that comes in a little bit earlier than the FOMC event. So right now, either this could be a trigger for further selling in the euro, the pound, or against the yen crosses. That's what we're here to look out for tonight. Okay, so right now let's focus on the Euro USD in terms of how far the Euro USD can go, and then we'll go to the Aussie USD and everyone else. Right now, in terms of support, we still have 99 cents. In terms of support, in terms of projected downside for the Euro USD, we have around 98.50 and then 98 cents in terms of how far the Euro USD could actually fall if the FOMC is hawkish tonight. I'm not sure if we're actually going to be looking at the same movement as these US CPI numbers, because we already have that the whole tracking lower here in terms of price movement for the Euro USD. So we actually have that. It created a channel. It continued to break down. So it actually created a small flag within a much bigger flag for the Euro USD. Intraday traders would be able to pick this up. We have a little bit of about 4 days rise, and then we have a fall as the week opens this week. Anyway, going on to Euro USD, in terms of how far it can go, we do have a little bit of a projected support around 98.50, and then below that we have 98 cents. Again, we are in uncharted territory for the Euro USD at this point in time, so we'll see how it goes. In terms of breakout and whatever else, we already left the parity level. We already left that 1.0050. Behind, we are actually closer to 99 cents in terms of support right now. All right, so it doesn't matter if you're a swing trader, intraday trader, whatever. It's still going to be 99 cents, which is going to be the floor that needs to be broken before we see further drops in the Euro USD. So if you're kind of expecting a huge price movement in Euro USD, you might be a little bit disappointed in that, because we are actually trading below that parity level. Sellers are really kind of hesitant to continue shorting the Euro USD. In terms of buyers, we still have people thinking that, yeah, this is a cheap price. It's about 1 cent lower than the US dollar. Some people still think that, going in is a great idea and stuff like that, but I still wouldn't want to go in for a long with Euro USD. I would wait for the breaks to the downside for the Euro USD. It's just a little bit tough because we had that drop earlier, about 50 pips in terms of drop, immediately following Putin's comment in the market earlier today. So it kind of used up the range. But anyway, this is going to be the daily pivot. So we are actually at support 2 for the Euro USD. So in terms of how far it can go, yeah, we're still looking at potential support coming in around 98.50. But that's pretty much it. because if you take a look at the whole movement today, it actually has dropped significantly. It opened below pivot, obviously, but we actually see a drop around 89 pips, very close to a full percentage today. So we already had that movement going on. Whatever movement that's left, that's potentially more of a leftover on the Euro USD. So in terms of how far it can go, if you're planning to go short, if you think the FOMC is going to be more hawkish, you're not alone. I think market is actually preparing for that potential scenario. So we have that little bit of a sell-off on the Euro USD. If you are planning to go short on the Euro USD and you want to be targeting 98.50, this is the potential scenario here. In terms of risk reward ratio, you're still going to be okay. Minimum stop loss is about 30 pips. I'm not too comfortable with a high impact event that traders have been waiting for close to 2 months, and then we leave about 30 pips of a room to go. I don't think that's reasonable. But I mean, if you're attempting to just take whatever that's left over, there is a potential for this one to continue lower towards 98.50 at this point in time. Any projections below 98.50, I think we are looking at really more of a high volatility scenario here. If we don't see that, or we have more of a neutral comments coming out from the FOMC, then yeah, I think around 99 cents, if price managed to just maintain a position above 99 cents, then we could potentially see a different scenario. But right now, I think pretty much most of the market is pricing in for that potential rate hike and potential increase in the future projections in terms of the federal funds rate in the US. So we'll see how it goes. All right, need your help? Yeah, I'm here to help. If you have any questions, to type it in. Okay. So that's for the Euro USD. So really, in terms of intraday positions, the closest stop loss that you could have, it's really just maybe around 99.40, maybe around 99.50 if you want to, but the projected risk reward is basically just right around this. So if you're planning to go short on the Euro USD and you want to go short on Euro USD, then make sure your stop loss it's at 99.40 minimum. If you're not willing to risk that much, then don't. If you're a swing traders, I would say wait for today's FOMC to make a decision tomorrow, because we need to kind of digest the economic projection and stuff like that. Then position traders are gonna go in there. In terms from technical perspective, it is a little bit tough, because if you take a look at the daily here, we are looking at that further bearishness in the Euro USD, but we do acknowledge that the support at 99 cents is significant. Attempted to break that at the beginning of the month. We are now closer to the end of the month, and we are back at around 99 cents. We have that daily close below 99 cents, then yeah, we can project further weakness in terms of how far the Euro USD can go. But until that eventuate, position traders that want to get back into the downtrend, it's a little bit tough, because we are trapped between parity and 99 cents. So I just want to stress that out. If you are an intraday trader, just make sure your stop loss is at a minimum 99.40. That's pretty much it. Okay. So Euro USD, nothing much going on with the Euro USD. Pound USD, this is a little bit unique in terms of daily, in terms of how far the extension has gone. We have broken past below 1.14. This is currently, it has actually touched 1.13 and then bounces back up. So in terms of how far the pound USD can go, it actually hits the first projected target in terms of how far it can go. If it does break below 1.13, then yeah, we might be looking at a move towards 1.12. Keep this in mind though. I think today is actually the lowest the pound has gone down in 37 years. Okay. What do you think would happen to gold if the Fed hikes interest rate by 75 basis points? It's not about the interest rate as I started out at the beginning. For those that just joined in, I just see a little bit of an increase in people joining in. Let me just show you something here. This is what we want to be focusing on. This is going to be what a lot of traders are going to be focusing on. Anyone that follows what the FOMC is going to be doing, they are going to be looking at the economic summary of economic projections that's going to be published tonight. It's not about the interest rate. So let me just stress this out for you guys. You know, if you guys are not familiar in terms of how the FOMC works and stuff like that, and just getting the hang into the fundamentals, maybe this is actually a good time to be a learning experience, I guess. Now this could be a new to about 99% of all of you out here. But anyway, we kind of know the interest rate hike is going to be 75 basis points. So in terms of them hiking lower than 75 basis points, it's a bit tough. They warned this last month, right, during their rate hike, and then the press conference. It's actually not last month. They talked about this during the Jackson Hole Symposium. So Jay Powell actually warned about this, that they're actually going to be there is going to be an unusually high rate hike in September. So the projection is right now 75 basis points. I think a lot of people actually priced that in. If going by just the interest rate hike, they hike by 75 basis points, probably nothing is going to happen, right? Nothing is going to shock the market. So that's not the whole point of tonight, because a lot of people kind of understand that there's actually going to be an unusually high interest rate hike. 75 basis points is priced in. There's about 19% probability it could be 100 basis points. If there is 100 basis points, then obviously gold is going to crumble. But if it goes just by 75 basis points, I don't think it's a fair thing to say, hey, yeah, hike 75 basis points, that's it, move on. It's not as simple as that. So tonight we're actually going to be looking at the economic projection. So for those that just join in, this is what the market is going to be focusing on. Let me see if I can zoom it in a little bit. All right. So this is the dot plan. Basically just trying to figure out in terms of the target range for the federal funds rate, which is the interest rates, right? How far they want to take the interest rate. As in June 2022, for 2022, the projected range is basically right around 3.5% to 3.75%, right? Now, if you take a look at the Fed funds rate, if they hike by 75 basis points, it's actually going to take it to 3.25%. So, in terms of projections in 2022, they're already off. So, they need to make adjustments. Okay, so this is going to be key. What they're projecting in terms of their target funds rate or target interest rates. Number one, if you take a look at 2022, most of them are saying, 3.25%, right? To 3.5%. That's basically the range. If they hike by 75 basis points tonight, that will take it to 3.25%. If they hike by 100 basis points, it will take it to 3.5%. So the projections that they gave out in June, it's basically useless at this point in time. There's going to be an update to this. And the update to this, it's going to be higher than whatever the June projection is. So there's not much of a choice in the market. And that's why you see the the whole dollar getting stronger and stuff like that, because if you are someone that just follows what the Fed is going to hike by and you don't understand the economic projections, then yeah, 75 basis points or 50 basis points really is just about it. But it's actually more than that, because we are actually very close to the cap that the June projection gave out, which is at 3.5%. Okay, so again, let me remind you, if there's a 75 basis points hike tonight, then it will be at 3.25%. If there's 100 basis points tonight, it will be at 3.5%. Therefore, the June projections for the year 2022 would be obsolete, and there will be new projections. We still have October, November, and December, right? 3 more months. If the Fed are actually hawkish, they are going to shift this up. So the thing that the market is potentially looking at right now for 2022, we might see a little bit of a shift towards 4.25% to 4.5% in terms of target rate for the by the Fed. And that would play in okay. But if they put it up higher than 4.25% or 4.5% or even higher than that, even if there's one dot at closer to 5%, then we are gonna take that as an indication that the FOMC is really, really hawkish, and they intend to hike further by shifting their economic projections in terms of their dot plan. So this is going to be key, right? It's called the dot plan. You guys can take a look at it, but I'm just giving you that right now. This is what it's going to look like, and the reason why market keeps saying Fed is hawkish. It's not about the interest rate right now. We are basically at the end of the projection for 2022. So there's actually going to be a new projection that might show a higher target rate. The higher it goes, the more hawkish the FOMC is, and that's basically what the market will move by. So initial reaction might be a lot of traders just understand the 75 basis point hike or 100 basis points hike, not knowing that there's actually the economic projection behind it. Then the initial market reaction could move in one direction, and then everyone settles in. Analysts take a look at the dot plan. Analysts take a look at the economic projections. Long-term traders are going to take a look at this. Treasury traders are going to be looking at this as well. And once it clicks, once they kind of understand what the FOMC is likely going to be doing, they're actually going to issue out outlooks, right? They're going to say, hey, the initial market reaction is actually wrong. The FOMC is super hawkish. We see that shift to the upside in terms of their economic projection. Then the market could reverse. So think carefully. Don't pin yourself too much on the 75 basis points or 100 basis points. That's something that pretty much market has already priced in. This is something that market hasn't priced in yet. This could be that surprise element tonight. Okay, so we clear for those that join in and stuff like that. Anyway, let's go back to the charts. So yeah, for pound USD right now we do have that 1.13 projected moved lower towards 1.12 if it does break. This is how it looks like in terms of the hourly time frame. Again, that drop earlier from Putin's comment that really created a little bit of a sell-off in the market. So that move happened a little bit earlier. It did take it lower than the previous low, around 1.1350. It's currently being tested as a resistance. If the hourly maintains a position below 1.1350, then yeah, we're looking at a potential move towards 1.13, potentially even lower. But if you take a look at the range in terms of how far the market has moved, right? Look at the scale of the market here. Again, it's very close to 100 pips. It's 83 pips. So the market has already created that range. So yeah, could it be a good thing right now? If you take a look at the pound USD, do you have a floor that you can work with? I would say yes. In terms of resistance, do we have an intraday resistance to work with? We do. We actually have 1.1350. So if you're planning to go short on pound USD, if you think the FOMC is going to be hawkish, then definitely want to have a short position in pound USD. I don't really like going long pound USD at this point in time. It's a little bit risky. It's not like the stuff on Monday that we talk about. There's a potential for a bounce at 1.1350 and stuff like that, because that's that shift in momentum that was detected. Some people actually trade it all the way down up to 61.8%, 78.6%, but that's pretty much it. This trade was actually on Monday's session. So right now, if you are planning to go short, I wouldn't say go long because we just created a new extension. If you want to know that extension, this is basically it in terms of how far the market projection is. Right? So we did have that support basically at 127.2%, very close to 161.8%. So if you are planning to go short, if you're planning to trade on pound USD, a short position is much better than going long. Going long is just a little bit too risky. Intraday, in terms of stop loss, you can have it just slightly higher than 1.1350 in terms of target level. In target 1.13 initially, and then you can adjust it accordingly. But in terms of targeting that, you're left with a really small range. You're looking at around 20 pips in terms of stop loss. In terms of target, you are probably looking at just around 30 pips, right? Is it ideal? I don't think, again, as I said, this could be ideal if you're a really short-term trader. If you're scalping the market and you take a look at this one, you want to go with the trend. I don't think it's a bad idea. But I think it is to a certain degree if you're not a scalper in the market, living about 17.9 pips or 20 pips of range for the pound USD that has moved 83 pips today, that's just a little bit cuckoo, right? So if you really think that the pound USD could go weaker, that the FOMC is going to be really hawkish, and you want to have a position before the event, then make sure your stop losses are a little bit higher. Ideally, you want to have it at least above 1.1375. That's going to take it to about 50 pips. Then you can play with your target level. You can go for 1.13 and then adjust it to 1.1250. That's a viable option. Or if you want to go by the daily, that there's a potential projection push towards 1.12, then that could be it too. But in terms of range, you're not really looking at the CPI kind of range here. Even if it does go all the way down to 1.12, you're looking at around 130 pips of projected gains. That's pretty much it, just 1 cent. Right? Just keep in mind, the pound USD is at its 37 years low today. 37 years. That's a long time. Right? So think about it. there is a lot of concern here. Right now, in terms of key support, I think we are looking at 1.13 as a strong support. If it does break below 1.13, then yeah, we do have a projected floor at around 1.12. But that's pretty much it for pound USD. Nothing too fancy here. All right, let me go through the questions first. I know I talk a lot about that dot plan because I think this could be a learning experience for anyone that wants to learn about fundamentals. So yeah, whatever happened to the FOMC today, would it have an impact on the euro yen? Yes, it will have an impact on the euro yen, most definitely. We'll take a look at the yen crosses a little bit later. There's a little bit of a shift in the yen crosses because of safe haven buying from the comments from President Putin. So yeah, we'll take a look at that. I've moved my target for you on 9868. Hope we can reach today. What do you think? For Euro USD 9868, yeah, should be good. I mean, in terms of projected move, I think we're looking at potential towards 9850. Do keep in mind though, 99 cents is a strong support level. We need an consistent hourly break below that 99 cents. The support today kind of give you that range. Basically, we need to close below 98.90 to see any significant sell-off. Yeah, for EU, I think 98.50 adjusted target should be okay because that's the first estimated support for the EU. We see a position from last week. Could we move our stop loss on EU to 1? Yeah, and pound to 1.1550? Yeah, by all means if you want to. But Albert, I would say lock in something. I mean, if you want to move your stop loss in terms of pound to 1.1550, You can actually move it lower to close to 1.1450 or 1.14. I think that's a much better option. Yes, visuals. All the best. All my positions already closed. All right. On the FOMC meeting, we'll show a projection for 2025. I think it will get more impact, and market maybe will overreact for this and the terminal rates. Yes, in terms of the impact for 2025, I think it's what's going to kick in. It's actually the 2023, because if we take a look at the dot plan for the previous one. Sorry, I just need to keep coming back to this because again, this, if you know, people have been bugging me when do I want to talk about fundamentals. This is something you need to learn. Economic projections are basically posted out every quarter by the FOMC. So tonight is one of those nights. So again, a great learning experience. If you want to know, the quirks about interest rate hikes and whatever not. All right. Key thing, if we take a look at the movement here, 2022, 2023, and 24, what's key is actually 23. That's basically it. 2025, if it does show up, is actually going to be lower projection than 2024. Right now, the 2024 projection is actually already above 3%. So we'll see what happens there. They might shift the 2024 projections to be maybe about 50 basis points lower than the 23 projections. So yeah, that again could be hawkish from the FOMC side. So this is actually a really a good learning experience. Everyone just want to know what's actually going on, why the Fed stuff. There's more to it than just an interest rate hike. Okay. Okay. How do we analyze the XAUUSD? We can take a look at that in a second here. So we good with the pound USD levels. I'll go to gold and oil, and then I'll go to the yen crosses. How's that? Okay. So let's take a look at gold. In terms of support level, we are actually very close to it. We do have that around 1650, but technically speaking, we are actually below 1695. So if there's any progression to the upside, it will need to break above 1675, and then it will be capped by 1695. In terms of, is it time to go in long for gold? Might not be the time to. We have seen that fluctuation today from the comments from Russia. We saw that shift a little bit higher in terms of gold. But again, if you take a look at this one, it's capped. It's going to be capped at 1675. Above 1675, we've got 1690, 1695. So if you take a look at the whole momentum here, it is choppy. It's actually really, really flat right now. But in terms of range, we are actually looking at a diminishing range for gold. So technically, it is at a really, really long triangle. Probably classified more as a symmetrical. I wouldn't call this a pendant any longer because it has been there for an extended period of time. But we are looking at two potential scenarios here. Right now, if we want to focus on what's going on, take a look at the pivot here. The daily pivot, we are actually looking at a resistance at 1675. So if you're looking at how to analyze the market tonight, you want to pay close attention to 1675. This is actually going to be really key. If you take I would shift it a little bit higher. Okay, let's say we really want to shift it $1 above the resistance one, just in case. All right. Right now we are looking at a little bit of a leftover from the safe haven buying that happened just now from President Putin's comment. We saw that increase in gold. We saw yen gaining strength as well. But again, let me just talk to you about this. We are technically still within a range. Sorry, this should be a little bit higher because we are actually looking at this range. Let me just highlight this for you. All right, we're still within this. So we're looking at more of an upper limit in terms of intraday movement for gold. If we know the FOMC is going to be hawkish, then the impact on gold is actually going to be negative. That's the fundamental logic behind it. As I said, for those that don't understand the whole economic projections, then they might say, yeah, 75 basis points. Everyone expected 75 basis points. No 100 basis points. Let's, it's time to buy in on gold. That's fine. We might see a little bit of an initial reaction that might potentially test 60.90, 60.95. But then, as I said, if the economic projection is actually hawkish, as economists, analysts, they're going to take a look at that, and then they're going to give an outlook to their clients, and then everything is going to sink in, and we might see a little bit of a reversal if there is that hawkish tone from the FOMC. In terms of how far it might go and stuff like that, I wouldn't want to be going long gold, because right now, okay, let's just ignore the fundamentals. Assume we don't know what's going on, right? I just want to go long. Let's say, the war's going to break out again. I think it's really time to go long. Even if you want to go long, then your initial stop loss would be around 1660. In terms of target level, you could be looking at 1690, 1695 at best, right? But this is a hard push for gold. Okay? You might be thinking, yeah, $17 to the upside. That's great. I want to go in long. You need to take in the risk though. It's also at $17. In currencies, I would say, yeah, it's 1-to-1 risk reward ratio. That's completely fine. But you guys trading futures gold, you're looking at a different pip count on this, right? This is huge. So just be mindful. Some people might say, you know what, I can have my stop loss over there. That's really close. That's half of it. But yeah, it's really, really tough, especially in with the potential that the FOMC is going to be more hawkish. If we know they need to shift up their economic projections, it's not they need to, but we know they have to. So that's why I brought up the dot plan today, because if we take a look at it, the hike tonight is going to bring it up to the limit at 3.25 to 3.5%. So yeah, it's not they are likely, but they are going to. It's just that a lot of people don't know, there's more behind funds rate tonight. Okay, gold. Tough way to see the dot if it does make a pattern. It does has a pattern, right? I mean, I just can't annotate this right now. But if we take a look at this one, there's actually a pattern. We are actually looking at more rate hikes going into 2024 and then more rate hikes in 2023. And then, they start cutting off interest rate in 2024. If the picture right now is, you can screenshot this. It's completely fine. If you don't want to dig in to on the Federal Reserve website, take a screenshot of this and compare it later with the new one. What I'm concerned is not about the 2022 and 23 that it's going to get shifted up. What I'm more concerned is that the 2024 side is going to get shifted up higher as well. So we might see 23 and 24 a little bit flat. If that happens, if the dots are actually flat around 4%, then you should be worried, because that's a really hawkish FOMC. That's opening up the potential that they are looking at inflation sticking a little bit longer than what the market is expecting. Okay. Okay. Did the dollar yen break the daily triangle? Not yet. The cap is actually at 145. This is something I would talk about last Friday, yeah? So if you missed out the candlestick on Friday, we did actually look at the potential for ascending triangle on the dollar yen. But we will talk about dollar yen in a minute. Let me just go into oil very, very quickly. I just want to show you the movement intraday. We already have a little bit of a shift to the downside. This is not a regular class A bearish divergence that you know some of you guys might be picking up here. It's not. It's about the same vibe, but it's not. The reason why it's not is because we're not in an uptrend for oil. Okay, so not a divergence. So ignore that. Okay. Okay, so oil is starting to move back down a little bit. So intraday traders on oil, if there's actually an hourly close below 84.50, then you might want to consider for a potential return towards 83 or 82.50 for oil. So this is going to get us. The only concern right now is that with oil and overall energy, if the situation in Russia intensifies, it's actually going to have a huge impact on the euro. It's going to have a huge impact on pound, but mainly on the euro. There's already gas shortage or concern, right? Russia's been cutting off that Nord Stream pipeline. If war breaks out, or if Russia declares war, right? The reason why it's been prolonged so far is that because Russia has not actually declared war on Ukraine. Comments today basically points towards that, and if they do declare war on Ukraine, that's going to be official. If that's the case, then we might see a repeat of whatever happened in March in terms of energy prices. So whatever you're thinking on oil, let's just keep that in the short-term view that we actually do have a strong support at $82 and $83 for XCI. So yeah, if you're planning to go short, hey, cool with that. Just keep in mind, in terms of your stop loss, it's actually going to be above 86.50. In terms of your potential target level, you're going to be looking at around 83. It's still going to give you an okay risk reward ratio. All right, but just make sure you have a stop loss on this one, because again, the risks from developing situation in Ukraine and Russia, that's going to have an impact on oil as well. Jeffrey Terlumen, I was for the idea sent to me, but I still lost. Well, that's why we have this session. We're not just relying on trade ideas from random people. It's ideal if you understand what you're doing first. Okay. Dollar yen. Let's take a look at dollar yen. So we talk about gold. We talk about oil. Let's talk about dollar yen. And then yen in general. Let's talk about yen in general. Okay. We've got some overlap. So we've got some early positions in dollar yen for those that came in on Monday. Projected target range would be 145 first. If it does break above 145, then you're looking at 148. But again, that's more of a projection, more on the daily scale. If you take a look at it on the hourly time frame, it is a little bit choppy, but we are maintaining position. What I'm saying is that we were looking at support around 142, 143 range, right? So we were kind of anticipating that move towards 142, 143 for the dollar yen. So I think I can clear off that range. We are still within range, but we don't need that range right now. We do have a little bit of support right now at 143.75. I'll hide the pivot, but we are basically capped a little bit in terms of the daily pivot. Okay. So yeah, dollar yen, we're still looking at a potential push towards 145. Again, if we're looking at the sell-off, it could really approach 145 by now if there wasn't that sell-off on the yen gain from the safe haven bid just now. So we see that a little bit of a blip, and then market picked up, closed back up by 143.75. We're now about 144. Is there going to be a breakout on the hourly time frame? Gregorius, I see that breakout on the hourly, but the daily will still need to be at 145. Anyway, Can it go all the way up to 145? So here's the thing. We need a break on the daily, right? So for now, we are looking at resistance coming in at 145. So even if the FOMC is hawkish, whatever not, we might only see a little bit of a move back towards 145, and then it's going to get tough because it needs to break above 145 for the uptrend to continue. Okay, so if the FOMC's projection is really hawkish, then we could actually see that happen. If not today, this week. All right, but right now, if you're trading intraday, just keep it small. In terms of target to the upside, we're looking at a potential target 145. So if you're planning to go long on the dollar yen, just make sure your stop loss is at a minimum below 143.50. Ideally closer to 143.25 if you want to. In terms of target, go for that 145. All right, so you can have 85 pips of range of stop loss, and that's still going to be, ideal rather than placing it below 143. If you are a position trader, if you're a swing trader, then yeah, you want to be looking at a stop loss below 143, maybe closer to 142.50. Okay, but intraday traders aiming for that move towards 145. The minimum stop loss would be around 143.50. That would be right around there. Okay, might see a little bit of a whipsaw, but this is the minimum risk. So if you're not willing to risk the minimum of 60 pips, then don't take the trade today. Wait until everything settles down and then trade. But if you are, as I say, I have my own opinion. You guys can come up with your own opinion. My only concern is that, not a lot of people know about not a lot of people pay close attention to the dot plan that we just talked about. So for those that know what the dot plan is and what the potential outcome is, then yeah, we're looking at really more of a hawkish scenario coming out of the FOMC. But it might surprise the market a little bit. The only thing that I don't know what's going to happen is the reason why I'm not too comfortable placing a short stop loss. I'm more concerned with the market having a whipsaw. It goes and take out your stop loss and then go the other way. That could be a potential scenario. So if you have a tiny stop loss, that's the risk you need to consider. Okay. As I said, a lot of people might not get what's going on. Big funds could actually look at this as a potential to get into position, and it could actually create a whipsaw in the market because retail traders that are jittery or don't know what to do, or scalpers in the market, they might get in and out. They might get their stop loss taken out and stuff like that. They are mostly going to be clueless with the whole FOMC event tonight. So again, big funds could take advantage of that. I'm just saying that. So the only reason is if we don't have that if we don't have that move from comments from following Putin's comment, then we actually have a lot of room tonight. But it was used up, so we have an earlier sell-off that's kind of unpredictable, changes things up a little bit. Okay, so market could whipsaw tonight. We'll see what happens there. Yeah, we did talk about pound USD. For pound USD, we are looking at what 1.1. All right. For pound USD, we've got support at 1.13 and then potentially towards 1.12. In terms of intraday projections, if you do want to go in short, make sure your stop losses are above 1.1375. I still don't like the idea of having such a small stop loss, right? But for those that want to go short, then your initial target would be at 1.13, which is not even going to be 1-to-1 risk-reward ratio. And then potentially you could adjust it even lower, maybe towards 1.1250 if you want to. But ultimately, for those that want to target 1.12, hey, I mean, it's there. The only concern, as I said, this is at 37 years low. So a lot of psychological things going on right now. Fed hike 75 basis point, yen drops to 143. Hawkins press conference, yen 145. Could be. So yes, Tian, I'm actually concerned about that part as well. People might get the initial reaction by going one way, and then the press conference happens, and then the FOMC starts talking about what they're planning to do, what's the terminal rate, what's the projected Fed fund target rate. That could really shift things up a little bit, right? For those that don't even read the dot plan, the press conference, Jay Powell is sure to talk about the new target rate. The reporter is actually going to ask that, right? So it's a given. So I mean, if you take a look at the situation here, if Fed hikes 75 basis points, it drops down to 143, and then it becomes hawkish during the press conference, and then it goes all the way above 145. I'm not denying that possibility. I think that's a possibility. I'm trying to say the whole night. We might have one initial reaction, and the market might turn around once everyone process what's going on. So that's the thing you need to watch out for tonight. Is it correct to say swing trading is more profitable as lesser risk and more rewards compared to scalping and intraday? Kelvin, my own opinion. The way I look at risk, it's not like that. I always say risk is this: if there's a swimming pool with 100 sharks in it, and you jump into that pool 100 times a day, right? Let's say, then yeah, the probability that you're gonna get, you're gonna get eaten by sharks is it went up a lot higher, right? Than jumping into that pool once a day. So I think that's the kind of scenario that we're looking at here. In terms of risk, I would say I'm more adjusted to swing trading. From my experience, I don't like scalping. I really don't like scalping. I used to scalp as a beginner because every beginner thought that scalping it's really cool, it's easy, right? It's not. It's actually harder. There's a lot more noise in the market. In terms of risk reward ratio, normally you have double the risk for you'll risk 2 pips for 1 pip. You're probably thinking, oh yeah, I'm opening up huge lot sizes, so I can only need to target 10 pips and be done with the market. That's what a lot of scalpers think, and I think that's a messed up thought. But hey, I'll admit it. I used to be like that until I burned my account. Then I kind of figure it out. But yeah, from a risk standpoint, swing trading, you are dealing with a much bigger stop loss. All right, so it might be actually equal to the same risk as 10 scalping trades or 10 intraday trades. Okay, your stop loss could be a lot higher, right? I mean, for me, dealing with 7,500 pip stop loss, hey, that's easy. That's not a big deal. But to a lot of people that, their thoughts are more locked into, hey, if I risk 20 pips, that's already a lot. Hey, I'm only giving market 20 pips to move. That's not going to work, okay? Because we need to adjust with whatever the market gives. So the range could be huge, the risk could be huge, but typically the projected range is 1 to 2 risk reward ratio. So in the long run, it actually pays off. It's just that there's one thing to consider here. It actually takes a lot of mental strength to swing trade because you need to be able to hold on to your position, not changing your position around. Like if you have an open position and then market kind of reverses a little bit and then you freaked out and then you want to close your position, you can't do that. Okay, so from that perspective, the shift to swing trading might be a little bit harder because all of a sudden you're looking at a much bigger risk, right? But it's also a much bigger reward. It's just that sometimes it's tough because your mind is a very powerful thing and it does tells you to do things. So whether or not you can stay in that position, again, that's a completely different thing. So it does take some training or some getting used to before you are actually proficient in switching to swing trading. I just realized why some people say the Fed will raise 100 basis points. For me, that's so aggressive. Yeah, there's that 18% chance. The thing is, the reason why people have that 100 basis points thought, just to fill in a little bit, it's because of that Jackson Hole symposium. How Jay Powell addressed it and say, like, unusually high interest rate hike might be in the books or might be coming up. And then everyone thought, hey, but it's already high at 75 basis points. So if it's high at 75 basis points and then you say unusually high, then that's where people start thinking, hey, it could be a full percentage. It is really going to be a surprise to the market. But, I think we take a look at this. If the Fed hikes by 100 basis points, again, they're taking that 25 basis points room in terms of their dot plan, right? So if they are doing 75 and then do a more hawkish or higher target funds, that's okay. That's predictable. That's a given. But if they go by 100 basis points, then their target funds rate is actually going to be a lot higher as well, right? So is it aggressive? Could they do it? I think they could do it. Do I think the probability is there that they might do it tonight? Yeah, there is, but it's actually going to be small. I think they're going to go with 75, and then they're going to give a higher target fund rate. I think that's the scenario there. What stops some of us from swing trading is funds. Hey, swing trading doesn't have to be with funds, right? I mean, if you want to experience swing trading, if you have a small fund, just trade small lots. Think about it. Think about it this way, right? We did talk about it. We're going to talk about it more during the money management side of things, which is coming up in about 6 weeks' time. The way I look at it is this. If you manage your equity well, you know your risks. We have capital risk and then we have equity risk. If you understand your equity risk and you understand your capital risk and you manage your position accordingly, it's funds not really an issue. I'll be honest with you. I mean, I train a lot of traders, and the issue is not the funds. The issue is them not being patient. So is it psychological? I guess so. It does take a lot of training. But yeah. What's my view about dollar CAD? All right, we got requests for euro pound dollar CAD, and then hey, I haven't touched on the yen crosses, right? Let me just touch on the yen crosses a little bit here. So euro yen, we have that drop earlier. It's starting to pick up again, right? But the overall tone on the euro yen is a little bit unchanged. So let me just show you the daily. We set that resistance at 144. In terms of support, we still have that rising support. A lot of support to the downside, 141, 140, 50, 140. So that's euro yen. We got a little bit of a dip earlier, but well supported at 142. So if you want to know your intraday support for euro yen, it's at 142. So there's actually going to be a lot of support right now building up for euro yen. Okay. Again, hey, key events actually going to be tomorrow morning Asian session as well. For those that didn't know, the Bank of Japan's monetary policy statement. That might be a game changer as well. Might be expecting a new update from Bank of Japan. So yen traders, I would say, hang on a second. The FOMC tonight might not be the key event that's going to be the end of it all. Tomorrow's Bank of Japan monetary policy statement, that's going to be key because there's talk in the market about potential change in Bank of Japan's monetary stance to kind of combat the whole interest rate hikes that's been going on globally. Okay, so this is not done. The FOMC tonight is not done. If you want to be trading the euro yen, sterling yen, dollar yen, be mindful the Bank of Japan's event tomorrow morning is actually going to be a market. It could potentially move the market as well. Okay, so yeah, euro yen, we're looking at immediate resistance 144, immediate support at 142. Sterling yen, we are still good at 162.50 for support. We are looking at 164 as resistance intraday. But the overall tone on the sterling yen is actually within the Ichimoku cloud, so I'm looking more of a little bit more of a sideways market condition. For the dollar yen, we are quite clear that we are within an ascending triangle, right? So we talked about this since Friday. So for those that take advantage of this on Monday, that's great. Right now we have resistance at 145. We break that resistance, then we're looking at a move towards 148. Okay, so we good? All right. Next up, dollar CAD, and then we'll talk about euro pound. Euro pound, I'm not expecting too much from euro pound. Dollar CAD, so we did take a look at dollar CAD, yeah. Okay, here we go. 1 hour. We are past this. That's done. That divergence noted, no big deal. This is progressing even higher. Right now, if you are trading intraday, just keep an eye out. This one hits the extension intraday, 127.2. If you take a look at the momentum here, this might actually be building up for a potential hidden bullish divergence on the dollar CAD. So yeah, this is not done. We might see a little bit of a extended move towards 1.34, closer to 161.8%. Sorry, if it does break above 1.34. So you could use this and target 1.34 if you want to, but I'll just clear it off and just show you the pivots. That's clear. All right, resistance one is actually at 1.3425. So yeah, just look out for a potential hidden bullish divergence on the dollar CAD. If the hidden bullish divergence doesn't happen and the stochastics crosses up, that's good enough if it does break above 1.34. Okay, so intraday on the hourly, if you want to position yourself, break above 1.34, then your minimum stop loss is actually going to be this low, range low here. That could work. Again, I don't like the idea because you don't really give out a lot of room to go in the market, because that's only about 50 pips. But yeah, I mean, if it does happen, you know, price break above that, you could go for 1.3450 and ultimately towards 1.35 on dollar Canadian. Do we have room for that? I think we still have room for that. Let me just double check from this swing here. Yeah, close to 1.35. So not a huge issue for dollar Canadian. The only thing that I'm looking at here is that a potential break to the upside above 1.34. In terms of support, we have 1.3350. That's going to be your intraday range for the dollar Canadian. Okay, overall tone, great. In terms of momentum, it's wearing off right now. We still have, how many hours to go? 5 hours to go to the FOMC. Hey, you know, might be enough time for the momentum to create that potential hidden bullish divergence. So look out for potential. Okay. This one's easy. FOMC, Bank of Japan. If Bank of Japan adjusts their monetary statement, then there's not going to be any intervention physically. Because the whole point with, I think the Japanese government actually talked about this between Bank of Japan and the finance ministry, that physical intervention once off is not going to have a huge impact, so they need to change their monetary stance, and that's why people are actually looking at tomorrow's statement if there's actually going to be a change up. I know we talk about Euro USD, so if you want to rewind that, other than that, I'll go through the Euro USD. Aussie USD, I'll just touch on very, very quickly. There was a question earlier if this is actually going to go back up to 67. A little bit tough. Let me zoom out a little bit and take you through. We might see a little bit of a pullback towards 67. Do we see that possibility? We might, but that's pretty much the cap of it. If we take a look at the Aussie USD in terms of the daily here, we actually break below support right now. So technically speaking, If the Aussie USD is going to proceed lower, then there's unlikely going to be a retest at 67. If there is a retest at 67, then there is a high risk it will actually maintain a position above 67. Then it's actually going to go back within that range 67, 68, 69. Okay, so if we're looking at a breakout scenario for the Aussie USD right now on the daily, then in terms of how far down it can go, we are really looking at a potential move towards 66, 65.50 for Aussie USD, but that's daily. Intraday wise, if we take a look at this one here, yeah, we are closer to that support. We're probably going to be looking at an intraday support around 66.50. That's basically between support 1 and support 2 for the daily pivot. I just don't see the momentum going there right now. That's the thing, and that's the reason why there was a question whether it's actually going to retest 67. If we take a look at the movement today, it opened below pivot, went back up to pivot at 67. We missed it by 1 pips or 2, but it still counts as a potential pullback on this one. Okay. So has the retest at 67 been done? I think it's been done today. So we have tested the pivot. So right now it's actually within the pivot and the support one. So we break lower on the hourly time frame, obviously. Then yeah, we might see a little bit of a move lower to the downside. I'm just not seeing that momentum right now on the Aussie USD. As I said, you know, the slight hiccup 6 hours ago, that really kind of ruined things a little bit from a technical side, right? We're not really expecting a little bit of an earlier sell-off before the FOMC tonight, but we saw that risk of selling 6 hours ago. But yeah, as I said, you can take it in a good light or a bad one, but it basically creates a floor as well for the market here. In terms of Aussie USD, obviously we have that floor around 1.6660. You know, if you want to take a look at it that way, then yeah, I mean, if there's a break below 66.60, then, you know, further move to the downside, 66.50, 66.25 potential, yes. Any move back above 67 at this point in time, a little bit tough to say. Is there because that would really depend on the market thinking that the FOMC is not hawkish for that 67 correction to happen. This is not gonna end, right? We'll talk about Euro Pound, and then last request, Sterling Swiss. Okay, all right. Euro Pound, again, not really looking that great at this point in time. I wouldn't pick this as something to trade right now. The range is really, really small. Take a look at the whole movement that's been going on. Well, just compare the range yesterday and today in terms of pivot, right? You can get the whole idea there. Take the whole day's range. It's really, really small. It's 58 pips. Today it's 48, 50. You know, it is choppy. I'll be honest with you. And the impact on the FOMC, it's not really going to translate much to Euro Pound, because think about it this way: if the FOMC is hawkish, Euro USD is going to get pummeled. The Pound USD is going to get pummeled. The question is which one goes faster than the other. Right now, if I zoom out, it's not really a win-win situation. It's really more of a choppy market on the Euro Pound, right? All I can say is that we do have support at 87. That's pretty much it. And then we have that upper resistance around 87.75, about 87.80. But that's pretty much it. If you take a look at the pivot here, we are at support 1. Price is potentially looking back to move towards pivot. It could continue there and then go back to pivot. We could see that happen, right? Time is running out, obviously. But right now it is well supported at support 1, or 87.25. So we have that support. It is actually a small range. So intraday traders, maybe you want to look at two levels. That's all I can say. You look at support at 87.25. Right? And then you look at potential intraday pivot at 87.50. That's going to be your main focus. Right now it's actually within that. So there's actually going to be a breakout. So think about it. There will be a breakout. And there's also this resistance trend line that's still useful in the market. That's going to cap you on further progress to the upside. As I said, this is going to get stuck. And if I bring back the pivot, you'll kind of understand this. Okay? The move back towards 87.50, that's a move back towards pivot. Is it going to break above pivot? Maybe. It might penetrate the pivot a little bit. But then there's that resistance trend line capping it, which needs to be broken again. And if the Euro USD and the Pound USD get pummeled by the FOMC, if they are hawkish, right? I'm not saying they will. I'm just saying if. Okay? So don't get me wrong on this one here. The Euro Pound is not going to move. That's pretty much it. Because both the Euro USD and the Pound USD is going to get... They're going to move in the same direction for the FOMC event tonight. Okay? So Euro Pound is not really a great option. If you want to trade Euro Pound, you trade it based off, ECB rate hike, that's fine. Bank of England rate hike, that's fine. But FOMC event, you take a look at Euro Pound, pretty much a little correlation to do with it. I said 6 hours ago. 6 hours ago, that was a risk off in the market. Take a look at Euro USD. I'm pretty sure it was 6 hours ago. I was in the middle of a meeting, but let me count. Let's count. We are near the new hour ago. So we got 1, 2, 3, 4, 5, 6. Yeah, about 6 hours ago we have that sell off, right? Futures market doesn't work that way because the futures market is waiting for the FOMC. That's really key. If we take a look at the US 30 and the Nasdaq, key levels that we talked about on Monday still holds. So we still have that key support at 3,500. Right? This is from the daily. If you go by the hourly, then we're actually still within the Ichimoku cloud. Okay? So I wouldn't really call it more of a bounce off. This is more like easing up the momentum for potential further crash. I don't know, because in terms of how far it can go down, we still have that projection towards 30,000. That was the June's lows. So could it be that? I don't know, but be careful with the equity market. We do have support levels that needs to be broken. For US 30, we've got support at 30,500. That needs to be broken, and then we'll see the overall movement. In terms of the hourly time frame, if you're trading today, if it fails to go above 31,000, then you could potentially be looking at a potential short on the US 30. But that's really more in line if the FOMC is hawkish, right? And it fails to go above 31,000. So think about it that way. I wouldn't say that we are within any trend right now in terms of the hourly time frame. I think we are pretty flat sideways, so it's okay. Plus, if you take a look at the Senko span A and B in terms of the Ichimoku cloud, the thickness is the same whether it's positive or bearish right now, so it doesn't really matter. Pay close attention to 31,000. If it fails at 31,000, then you might want to go short, having a stop loss 31,250. You can target 30,500. Risk reward ratio is going to be okay. It's about 1 to 2 risk reward ratio. But just to remind you, it's huge. You are looking at 256 points of stop loss. Potential gain is also 500 points. Okay, but this is the hourly on the US 30. So if you don't think that's a huge risk, I don't know what is. Okay. Nasdaq on the hourly time frame, we do have that again. We got support coming in at 11,705. In terms of intraday resistance, you could point it at around 12,000. Okay. I don't think we are going to be looking at 12,000. I think it's a little bit tough for the market to. I think it's a little bit further than the US 30. But if it does fail at 12,000, then yes, we could potentially see more sell-off. Maybe back towards 11,700. Breaks below 11,700. Then you need to shift onto the daily, because that's going to change things a little bit. We got a lot of room to go to the downside if it does break. Right now, it's getting rejected at 12,000. Okay, so keep a lookout on the equity market. Yeah, we have a Telegram channel that we do Monday's session with. Okay, last one is sterling Swiss, and then we have to wrap it up for tonight. Yeah. Sterling Swiss. Why the exotics again? The FOMC stuff is not gonna rattle sterling Swiss a lot, right? We see that sort of in sterling, then yeah, we might see a quick drop in sterling Swiss. But in terms of how far it goes, I'm probably looking more around 1.09 to 1.0875 support range. That's kind of the best I can give right now, but that's basically this. In terms of how far it can go today. So you're really looking just to move lower towards support too. But if you think about it, if you don't have a position, I'm assuming that you do have a short position. This is going to be your minimum stop loss. You're looking at around 57 pips of stop loss. Potential gain, you're probably looking at 43. It's not even 1-to-1 risk to reward ratio. So yeah, give or take. Take a look at the daily. We sure have a lot of weakness. We can't even project further weakness on the daily. We actually need to take a look at monthly fib for this one, which is since 9th of March 2020 to 5th of April 21. So 1 year range projected target towards 1.06. That's going to be what's applicable right now for the sterling Swiss. We are not oversold yet, so if you're thinking sterling Swiss is oversold or you're attempting to counter sterling Swiss, please don't. It's such a huge risk to counter whatever it is right now. The stochastic, let me just warn you, is actually below 20 for basically since it's not even that. It's for 2 months. It's been below that for 2 months. Trend continues to intensify, so I don't see any reason that we expect a little bit of a pullback. Plus, we just broke below Key's psychological level here. Okay, we got below 1.1 yesterday and maintained that position lower. So I'm all in for further weakness on sterling Swiss. Other than that, I can't say much. I mean, if you're thinking of countering this, I just don't see that possibility on the hourly and on the daily at this point in time. Still a little bit too risky. Okay, so anyway, guys, I have to wrap this up for tonight. Good to have you with me. We are going to do a Japanese charting methodologies on Friday. So if you want to jump in, going to be the same time as today, but it's on Friday. Every Friday we're doing educational session. But good luck with the trade, guys. And for those that just jump in or maybe watching this at a later time, do keep in mind, keep track of the economic projections. Take a look at the dot plan. If you missed out on what am I talking about on the dot plan, I spent the first half of the session tonight talking about it, what you should be looking out for. So if you're watching this before the FOMC on the 21st of September 2022, then you can review the session quickly and then catch on with the whole dot plan projections. All right. Thank you all. Have a great night. Good luck with trades, and I'll see you soon.